Beautiful. Okay, so what's going to happen here is that I've got it set. I could take it off the anyone and I can just choose whatever area, but I'm more interested in price retesting this last buy to sell candle. So which is the area that I want her to look for. So I think the red's too high, so I'm looking for, I really like this 1 hour one. So the 40's going to be this one. It's going to be looking for a sell off the 40 EMA. 3 reasons that it's not going to take a trade. One is if it just times out. So I want to be in this trade before New York session. That's one way. It's going to disengage. The second is if I manually stop it looking for trades. Or the third is that what I'm thinking is that we made a fresh low. Price is pulled back 8 times out of 10. We should be able to retest that low or partial retest that low. If it does the retest, this red line is my cutoff point. So if it retests and then bounces back up again, I don't want it to be taking a trade off of a second test of this low. So that's the third reason it will disengage. She's happy, she's got a little smiley face, so she's actively looking for the trades. Risking 1%. Okay. What I'm also got it set for is that if it triggers when it crosses this area, it's going to put in a break-even point. That break-even point at the moment is just 50% of my target. So I was going to change that target. Was looking for stop loss going to be 30 points. That'll more or less. It's gonna these EMA is going to come down slowly a little bit, but 30 pips is going to be putting it above this area, which is okay. It's pretty wide. It's given me margin of error in case it does pull up a little bit deeper. 40 pips. I want that to be 35 pips. So once it does hit, if we get to about 20 pips, once it gets down to this level, it'll automatically move my stop loss down to break even. What I can also do is say, like, maybe when it does that 20 pips profit, I can choose to let it close some, or I can say maybe don't bring the stop loss all the way down to break even, but bring it down, maybe halfway to break even. So sort of minimizing any potential loss if it does happen to bounce off this area. And that's it, Her name is Emma. What's the blue one? This is the 20. The blue is the 20. This is the 40. This is the 50. This is the 100. The purple one, you make whatever you want. So if I decided to change this to, it's more or less I'm just using the EMAs to guide where I get in the trade. So say I wanted to take a retest of this area. This shaded area that I've got. Now, maybe that's going to be the 200. So I could actually just use this and customize and say, oh, not the 200. Maybe the 500. No, it's not going to be able to put it there. So it's more or less just saying that I'm going with the momentum. I'm using the EMAs to sort of give it a black and white number that she's going to take the trade from, and I can just be flexible with it. I'm going to use the EMAs as a dynamic level of support and resistance. If I wanted to take a trade off here, you could just go and set a pending order. So it's more that you're using the EMAs because we do know, like, even though it's not my preferred manual style way of trading, where I use EMAs, I don't use EMAs in my manual type of trading. So what I'm using the EMAs here for is that there are actually so many people in the world that actually do use these EMAs, and we do know that they do work. They do happen to have rejections, and at times they can be used quite effectively. So, and it's quite simple for an EA to actually be coded to, not simple, but it's far easier to get a EA to take a trade from a specific EMA, as long as it knows which one to look for. So why the 20? Just in case, in strong trends, the faster EMA would be more effective. In slower trends, then you might want a slower EMA. So the slower the EMA, generally the more, when they do touch, they are effective. But in a, say like when you've got a fairly strong trend like we did here, the 20 had a lot of touches, a lot of opportunities. The 50 didn't give you any until it was too late. The 20 on the 1 hour chart is the 40 on the 30-minute chart, and I find that is a fairly that's the one that is quite popular as well. So sort of like you're just giving it the difference between the 20 and the 50, like somewhere in between here I find is the sweet spot between number of trades and reliable trades. So why 20 not 8? Oh, so you can use 8 as well. Yeah, I do know. So if you wanted to, even on say like a gold, when things do move quite fast, you will find, there was a gold chart, you'll find on a gold chart, like on a 1 minute time frame, or on a maybe this go 5 minute time frame with a gold chart, when you get a particular session, like a New York session, quite often, once the manipulation is done, you will see New York session actually do like a 5 minute 20 EMA pullback. So what you'll be able to do is then say, well, if I want to take a 5 minute EMA pullback, then what I'll be looking for is like a 3 EMA on the 30 minute chart, and that should really hug price. So you can do that, you know. Did you have any trades where the robot was confused, did not do what she was told? She can be naughty sometimes, but that's what version 12 has tried to get her behaving. So it responds more to 10 EMA. So depending on this, oh sorry, I meant to pull that chart across. Depending on the strength of the trend, will give you a feel for which EMA you should use. But you'll find that once price is pushing up, quite often price will do like this is just where it comes to, if you have a push up, we know 8 times out of 10 it's going to retest the high, and then when we do get these pullbacks, this is kind of like smart money theory of discount versus premium. And before discount premium, all that came out, the way that I learnt that expect the pullback was often the 61% fib. That was usually a fairly good pullback. So let me just add. $618. So often this, let me change the color. This was how I was taught originally from people that are saying that once you've got a trending market, look for a 62% pullback and then look for it just to continue. Now, obviously, as the years have gone by, new buzzwords and ways of trading has come out. Discount premium. Basically, we're just looking for size of pullback, and if there is generally momentum in the market, even if this was, say, like any time frame that creates a wick, we know that with volume, wicks get filled, and that is simply a lower time frame push, pullback, push. So whether we use discount, premium, whatever, all the ways of saying things has still led to the same way of trading, that in a trend, buy the pullbacks, or in a downtrend, sell the retracements. either way, it is, we're looking for taking a buy from this area, and if we can configure an EMA to be using it as a dynamic level of support. Other people might use, like, you know, the static trend lines. Other people use EMAs. But what we can do is we can get some robots and tools to say that, look, I'm just looking for a pullback. When we get a pullback, I'm interested in taking the trade. If the market moves really strong and pushes up like that, and the 20 EMA has been drawn up to like here, and then the 50 EMA is lagging behind, I'd be more interested in just saying, like, well, I want to have a 62% pullback, or I want to have a pullback at least halfway, which is the EMA that's going to be closest to my target area. Now, if the distance between the high and the pullback area, if this is at least, or roughly, say 40 pips, then the vast probability is I can at least do a partial retest. A partial retest, if the range is 40 pips, is about a 20 pip range. Now, if we can then get price to do a push, 20 pips in profit, should this be part of my trade management system that I have in place? I think personally, and from all my back testing and even people that I spoke to, is that if you just did nothing and let it do its thing, more often than not, you'll take more losses, but your wins are going to be far better. But it can be really hard to stomach as a trader giving anything back. So a lot of people will do a trade management system, and I agree, it is far easier psychologically to have a trade management system. So there are going to be people that take a trade at 20 pips in profit. Should we take partials, or should we move our stop loss up to reduce the loss if it does come back down now? If we did nothing, I think you are going to be more profitable in the long run. If you are doing a funding challenge or something that you're operating with limited drawdown, then you're probably going to need to have some trade management system. You're going to cap your total profit, but you're going to also then limit total losses as well. And if you're operating with a drawdown, then I think that's probably the safer thing to be doing. Either way, if we can actually just take out that human side of thinking, like, where we make most of the mistakes is in the trade management side of things. So the idea of having a robot to be able to sort of do what we want to do, and then if I can just say, now I'm just going to put her away, she's going to do what I've said. I'm going to trust my stats that I've taken and my forward testing, and I'm going to just follow that system. I'm going to take the human part out of it. It already knows what my plan is going to be. I've set it. I'm going to try forget it. It's going to notify me on my phone whenever it's taking the trade, but it gives me that sort of separation and boundary between me making the human errors that we do a lot in our trading. Now, when it comes to manual trading, which takes more focus, I'm going to focus on this, what I've set out for German 40. The upside of my manual trading is I've got more flexibility. I can do a lot more better risk reward trades if I'm using like a liquidity style entry. But this is nice to have in the background, that I can set this. This is a fairly, doesn't take much for me to go through all my pairs, work out which ones I want to take a set of going, and let Emma do her job, and then I'll do my job on the manual side of things. So, makes sense? Like, it's cool. I really like it. I think it's a great tool. You've noticed the SMA is sometimes better than the EMA, so just have a look at both. Yeah, some people I do notice that will have the 20 EMA and the 20 SMA. There's not going to be one that outperforms the other, but you're going to have times when one is outperforming the other. And the whole scheme of things, overall, it's even using EMA trading, I think it's still going to be a 50-50 outcome, but it just, knowing when the conditions are right for momentum, is going to be good to use the EMAs. When it's the rangy markets or indecisive, EMAs aren't going to be very good at all. But, you know, even in a rangy market, on the very, very low time frame, there's likely to be trends. It's just about the experience in knowing when to pick and choose when you see momentum and on what time frame that momentum is. How do you incorporate news into the EA? That's just by having awareness. Awareness that I'm not going to take a trade during a news event. So I've got 3 ways that this is going to stop. It's not built in to say turn off when news is on. That's my job. But I can set a timer. So if there's news coming up, it'll time out before the news comes out, and that I'll have to physically set this timer, or I disengage it, or I will say that if it hits my level, I'm not interested in taking a trade off of this level for a 3rd time. If you let it go overnight for quite a while, and you were just happy to, like, you know, you didn't put the time out, you're just happy for this to be a sustained trend, it's already hard coded inside that it's not going to take a trade between 30 minutes, remind me, Bill, if I got this wrong, 30 minutes until market close and for the first hour into the new market day, just because the spreads are too wide, too erratic, and as a safety feature, she's not going to take any trade for that window across rollover. Can you override her and in the middle do it manually? Sorry, what do you mean? Override her and in the middle. In the middle of trade. Oh yeah, absolutely. Yeah, you can close. It just puts you into the trade, and then you can tell her to close whenever you want, or close part. You can manually close partials. Say you want to change your take profit in all those levels, you can do all that. You just grab and change the levels. Oh yeah, just turn her off. Once you're in the trade, you just turn her off, and then you can do all the management by yourself. Yeah. If she's not looking for trades, she's not going to manage the trades for you. So if I say she took a trade right now, I was in the trade, and then I wanted to have full control, I would just turn her off, just by clicking the up or down arrow. What you'll also do is that, say I want to be part of a longer term trend, and say I was just taking, I'll go to Euro Yen for this one. Say we're part of this trend, and I didn't want to actually set a take profit. If I was analyzing this on the daily or 4 hour, and I was like, man, we've got so much move for this to just keep on pushing up and up and up, and we know that when yen is weak, and there's no real news, and you're buying, as in selling yen, then the moves are far steadier than if you're selling. So maybe I don't really want to set a target. So what she'll do then is you can still set how much risk you're willing for her to open at any let me just put her on this chart. I am keeping an eye on German 40 on my other chart, on other screen. So say I was taking a buy from any one of these, then I can adjust my risk and how much I want to open. And say I'm happy to take multiple positions. I can say put in 0.5% risk per trade, and I'm happy to have 1% total. So what she'll do is she'll only take one trade per candle, one 30-minute candle, But what she'll do is like, she'll take a trade here, and then the next candle will have to close back above the EMA, but then she'll be able to take a second trade here. So you'll have two trades running, and so two times 0.5% trades running, which is now going to equal your total risk, max risk that you've indicated. You could have a take profit, you could have no take profit set, so she'll just be looking forever. Sorry, she'll just let it run forever. You need to have a stop loss put in. The break-even point you can change, but basically what that means is that once she has moved one of these trades, say, or in this case both of them would have gone up plus 20 pips. So both of these, the stop losses would have been moved up, either to, if you say fully to break even, or if you just say, you know, bring it exactly to break even. Now these trades are now considered risk-free. So now she says, well, now if we do get a pullback, I can actually take another trade again. So I can add another trade again. So I can pyramid my positions, and you can just, in a sustained nice trend, every time one trade's been moved to at least break even, then the next one it'll be able to take more trades again. Once it takes a trade, once it does take a trade and it has broken even, what you can do is have it set so that you can actually keep on trailing your stop loss, so that you're moving older trades now into positive territory as well. So that's a really nice feature that if you do, doesn't happen that often, especially in this market, but if you do get these sustained trends and you got into the market early, every time a trade has been made risk-free, she'll just keep on looking to enter you into a new trade, as long as you never are more exposed than what you've indicated up here. So you're never going to be at risk of more than 1%, or less if you change that. For stop loss, when it says points, yeah, points is pips, but points is points at when you're talking about points in pips is 10. One pip actually equals 10 points across here. That's what because we never talk about the sixth number. We always only talk about like the fifth number. So the sixth one is it's called a pipette. So one pip is 10 pipettes, or 10 points. Yeah, so JPY is going to be slightly different. Gold is the same. Gold is 6 numbers. So one pip is point something. It's the 5th number. Pound New Zealand. See, there's 6 numbers. And whenever we're talking about how many pips did you make, we're talking about like if it went from 47 to say 70, that would be 23 pips. But really, it's 230 points. That makes sense? We had to make this work in points because of the JPY pairs. Otherwise, it would do 10 pips for a currency pair, then 100 pips for JPY. So a little bit different. Yeah, exactly. It's something that you will need to anyone. It's unless you've got a nice broker that will do all the calculations for you. Not many people would have been exposed to that. Which is it's good to be exposed to it, because that way, this is nice because on MT4, MT5, you would have to calculate your risk normally. So if I was going to go and open up a trade, Like say I was going to open up a trade. Say I was going to do like one lot or half a lot, and I was going to risk 10 pips, 20 pips. I'd have to mentally calculate what that's going to equal as my trade, and then work out what kind of risk am I opening myself up to. So that's the limitation of MT4 or MT5, MetaTrader. But there's plenty of scripts and tools and things that you can use that'll automate it for you, and that way, you know, you take out having to calculate pips and all that again. Can I make it an option to use both? Oh, pips or points? Not really. Not really. But I think once you get used to it, just knowing, like I did make the mistake before, but knowing that 400 points is 40 pips. I made that mistake. I was in this great pound New Zealand trade, and I was trying to set a trailing stop, and I set a trailing stop for I was thinking 20 pips. For 20 pips, so I put 20 in the trailing stop, and I needed to put 200 points as my trailing stop to be 20 pips. So what it did is, as soon as, because we know pound New Zealand spread is usually over 2, literally it was in such a good trade. I was like, man, I'm so happy with this one. I'm just going to set a trailing stop, go about my day. Literally as soon as I put in 20 points into the trailing stop, as soon as I pushed OK, trade stopped me out because of spread. So, or close the trade rather because of spread. Really annoying. But what I'll get a notification on here as soon as it triggers. So if it triggers in the next hour and a half. Anyway, let's do its thing. Yeah, I'll do like an update, a pre-market analysis, and I'll say that this is what I'm seeing. This is what I think are potentially good opportunities, and this is how I'm going to set it. So it'll be like a little try to keep the video pretty small, like 5-10 minutes long, and I'll just put it into it'll be on a. What I'll do, it'll just link you to like a Google Drive. So I need to work out yeah, so you go into like useful links, then it'll be in here, pre-market analysis, trade ideas. Click here, it'll link to my G Drive, and then it'll be there'll be just videos with the date you can watch. Probably gonna just because it's much quicker, because it's far quicker to use YouTube. I'll probably use Google Drive as archives where I keep older ones, and then what it will do is most likely it'll just link straight to my unlisted YouTube playlist where I'll put them in here. That way it's far quicker for you guys to watch and stream and pause and whatnot. And if you want to follow the ideas, you follow, or if you've got other ideas, you know, just at least this will be what I'm looking at for when I do like when the daily candle closes. So like this. And I'll say, what's the trend? What's the trend? How the daily candle close? Do I have a clear read for this one? Yes, no. If I don't, I'll move to another pair. And I'll do that for not every single pair, but the ones that I think are good options. Yeah, that's the main thing. I want to it's more so that people, I don't want to make people copycats. I really want people to actively be trading, and that's what all the streams and all that kind of stuff is. But it's more just running the series so that you really understand all the ins and outs on how the program works. And then it's got so much flexibility that I know there's many people here that will be able to see a different way on how to use it. And as long as you just got to know how it all works and how you can use it. But, you know, it all comes down to testing, forward testing, see if you've got an edge. And then it's really just to try make it so you don't miss some of these signals that you normally take. Whereas the only limitation, that reason you're not taking them, is because of time management. You just get busy during the day, or if you want to focus on a particular session, Asian session, you and I in UK, it's not really viable for us to stay up overnight to take some of these trades, but doesn't mean that those trades don't happen. And then people that are in Australia, etc., you know, you can't really trade reliably when you're at work. So this is just another, maybe you can have it looking for trades during the Asian session if we get a strong close on the New York session, then generally Asian session will have a similar little push in that direction. So it's there just to be a tool to help. Most of my efforts are still going to be focused on manual trading, because that's, you know, I'm a trader because I love trading. I don't want to ever use a tool that takes that love of trading away from me. I just want to maximize what I'm doing here. Some days manual trading, you know, isn't going to be a very good, you know, not going to win every day. Manual trading, not going to win every day using Emma either, of course. But at least then it gives you options. If you can't find a trade in New York session or whatever, because it maybe moved too fast or slow or whatever, it just gives you another trading style that you can incorporate that doesn't actually take too much of your attention away. No, the set times, that's every weekend. I'm just going to make it so that for like an hour and a half, we can just catch up, whether it's going to be a Saturday or Sunday. But generally, like on the weekends, my partner works, and you know, it's just going to have to see how timing works with the little one. But generally, I'm just going to, I always do study on the weekend. Every single weekend, looking at the charts. So I'm just going to have an open link for a Zoom session. I'll be here anyway, studying. And I'll just make it more of a set time, you know, that everyone can just jump in, join, can record it, keep it for the archives. Anyone that is that just wants to ask about a question about their trading plan or trade they took, or why did the market move the way it did, then we can just go and analyze it. And it's just going to be a set time every weekend, which is cool. Yeah. It's weekends are boring. It's definitely far funner to be. Like, I really look forward to Mondays. Well, I thought this was going to be it. I thought this candle coming down was going to push her into the deep waters. And another thing as well is that the reason why it's so important to have multiple ways of trading, because manual trading, the way I do it, it takes a lot of focus for a small amount of time. I could shift it to a higher time frame and then be less, have less screen time, but also that maybe it's just days that I'm just not going to be able to concentrate on the market. So I need to have I've got a backup system on how I trade, whereas I don't have to be as present at the chart, so that when I've got if the kids screaming in my room all night and I wake up tired, I don't want to feel pressured to have to trade. Catch you, Glenn. See you, buddy. So having something that can automate as much of the process as possible is always a good thing. And it's even a case like, say I just set my timing when I'm at the charts for when 4-hour candles close. So this was a great example for the previous week. So last Wednesday, if we replay this, drag this across. I'll just get rid of that. Get rid of that. Okay. So price, zoom out. No, this is a nice little support across here. All across here. Dug into it. Liquidity grab. Push back up and seeing momentum. Now, looking at this, the way price came down in those waves. Okay, so as it came down, every time it's sort of making these new lows, expecting to do a retest. Most of the time, these triangles were getting retested. Then we get to the 1 out of 10 times that it does this V shape. This is a liquidity grab from the support. Just a long rejection on the higher time frame. Price is then broken through the structure. Bit of overlapping structure, or however we want to draw it. It's broken through the first and second structure on the 4-hour time frame. Closed above, pulled back, pushed up again. Now, that then means that we've got bullish structure formed. First structure, second structure. Okay, second structure pullback. Beautiful little reaction. 4-hour time frame takes a long time, but now it makes sense that if we made a fresh high, we should retest this high, or at least halfway through this high. So pushing, looking at this, drilling into it, looking at the detail a little bit closer. Now, this is forming like a little resistance created. What we'd like to see, we've got clean traffic to the left. All we need, if we can get a strong looking candle closing bullish above this area, makes sense for us to then push up and at least retest this structure, this wick, either of these areas. But the one before has not made any triangle. How can I predict it is not the beginning of bullish move? This here in lower time frame. I'm not sure if I'm following exactly which, where I made the cycles. Well, because it closed above second structure on the left hand side, I think this is bullish and this is a second structure pullback. So I think as it's pushing up, what I'm looking at is my 4-hour time frame. I'm thinking longs. As soon as I see clean candles, I think that more likely we're going to fill these clean candles. So my bias is bullish. Now what I want to do is I'm just going to time my trading style for when I see a candle that I recognize that gives me a good clue that there is momentum in the market, specific direction. I'd be leaning towards bullish bias because of this digging into this support, doing like a liquidity grab, making a fresh high, breaking second structure over here to the left. Now we've just had a second structure deep pullback, which is great. We've got nice clean candles that we should be filling. Now we do have like if we were going to take buys, you'd want to be in somewhere at the base. Now that we've pushed up so far, you can't really enter buys up here. Too risky. You missed the move. Now we've got resistance candle form. So I can't look for buys, don't want to look for sells because my bias is to the upside. Another candle goes by, not really telling me that there's momentum. This is not liquidity style entering the trade. This is just telling me where I think price is likely to go. Okay, now 4-hour candle doesn't tell me anything. If I was busy and the kid, whatever, I would be saying, I'll come back and wait for the next 4-hour candle. Next one. Still nothing. Still nothing. Now it's giving us a little bit of accumulation here. This is resistance standing out more. If I wanted to be safe, wait for a candle to close. Price is pushing down, all good. Forming dojis, no momentum. Okay, a good close. Strong bullish 4-hour candle, closing above resistance, clean candles to the left, in an uptrend. Makes sense now that I can trade from here. Like this is my tradable range. 60 pips basically. 60 pips. On the 4-hour time frame, we can see most candles have top and bottom wicks. So the new 4-hour candle, I'm playing the odds that is the new 4-hour candle going to open and then just drive up to resistance with no pullback. Could do, but more unlikely. So what I'd be thinking is that, say I saw this 4-hour candle close and I timed it, so this is where the 4-hour candle closed. It closed. This is the first 4-hour candle of the new day, but I can see by the time. What I can do is I can just say Aussie yen, looking bullish. This is my tradable range. Go to the 30-minute time frame. Now I can just say to Emma, take a trade. Take a trade, just take a pullback long. Same thing, choose which EMA I want. In this case, if I saw something pull back to here and then go up, that'd be great. So 50 is a bit low. I'd go with the 40 or the 20. That if it pulled back to the 20, then that's okay by me. This is my cutoff point. I don't want to have price just take off without me, hit this and then come down. So I don't want it to rebound off here first and then get me into a trade on the way down. I want to just go with the waves all the way to that level. So Emma would be looking for a trade somewhere around here. Let's just say something like that. Configure it to say, let's go 30 pip stop loss, target. I can manually override and just set my target. But basically this would be what it would look like, something like this. I can walk away, Emma will do its thing, and then take profit, and that's it. And there's a reason why I'd be setting this as my cutoff point. That if I haven't got into a trade, I don't really want to be entering a trade because she'll be still looking for whatever EMA that I've indicated. But I don't want her to be taking a buy if I've hit my cutoff point. Okay, so that's why that feature is there. The spread's taken into account. Yep, she looks after the spread. If I had seen this, one thing I notice here is that, say that was the trade that she took for me during the Asian session, and then I came back and I got up early, was looking at the charts. This is London open now. This is Asian session. This is moving into London. This is New York. So I could actually then look at the charts. This is a perfect example here, by the way. That this is, I'll take away everything so you can't really, so we can really pinpoint. If I wanted to then take like a HCS setup, liquidity candle followed by a retest. There's a HCS setup. Stop loss entry can go on the open of the wick, the mid of the wick, or the low of the wick. Stop loss goes below the lowest point. This is what I love about manual trading. Emma is going to give me safe trades, but risk reward is just not there. Decent risk reward, but you know, give it a large margin of error because you're not watching it. Manual trading can give you beautiful risk reward if you follow HCS principles, and that's where I don't want you guys to be copycats. I want to teach you how to spot these for yourself. Because if you're taking this trade, man, even if you took the open, stop loss underneath this candle, the first liquidity candle, it's plus spread. Target, we made a fresh high, 8 times out of 10, we retest that high. You know, even just 30-minute time frame, 3-to-1 trade, liquidity style. I think it's I think algo trading has a very good place when you're a busy person, but if you love trading, manual trading is where it's at. That's what these streams are about. How many trades have you done so far with good Emma? Well, we've had, this is version 12 now, and we've had versions on the past for, I don't know how long we've had it for, a couple of years. No, been working on it for years. She had some less features, but we've taken a lot of trades in the past. Then it's sort of like the amount I've been using it. The amount I've been using it has been on and off because I've had different focuses as well. Yeah. So now it's we're making it more available now, which is cool, which is a good thing. Because what we're trying to do was to automate the entire process so that you don't have to do any analysis. But it's very difficult to automate a full-on system that we never have to look into, because the market just changes so much. So what it's settled on is that it's far better to just automate as much of the process as possible. Come on, German. We've got a triple bottom almost now. Yeah, news coming up. Clean candle up. Correct the move. For New York session in an hour. Oh, that song's getting repetitive. Let me change it. Doji liquidity candle. Wait for another one. Retest long. Smart idea. Maybe if this is the London low, maybe we can just see a steady move up again. I need to see confirmation here though. So wait for the low of the doji on 30-minute taken first for long. Yeah, potentially. It's not quite as low as I would like it to be, so I don't think this is the London low. I'm just popping it in there. But because we've got this imbalance and we've got a liquidity candle here on the gold, so that I've got a few points of interest that are still lower down. So I'm not convinced that this is the low. This is kind of in the middle of nowhere. This is, if I was taking a low, a buy here, I'm only looking at, I'm really only seeing doji low and London low. So it's a bit of a sketchy place for me to be looking for buys here because it's not really at a zone of interest. Oh, see you, Rodney. Sleep well, mate. I'd prefer it to be pushing to these areas or even retesting this liquidity candle. Some late volume. So if this becomes an imbalanced candle, I mean, candle's only just opened, but if it pushes down here, then it should retest this area at least. So counter buys would make sense if we got price action to at least this area, and that would at least then, you know, if we do get that kind of move, it's still looking, oh, it's not quite 50 pips. I was thinking it might be a 50 pip move, but you know, still not going to sneeze at 35 pips if we get the right read here. Is that kind of, I don't really often look at the charts actually this time. Never really streaming this late into lunchtime. So it could be some pre pre New York volume coming in. Raja likes to trade this time. Oh, I've got a phone call. Hold on a second. I'll come back. All right, I'm back. Raja Banks from YouTube. He often would be using stream around this time. That's where most of his trades are done. Ooh, did come back down to that area. Damn, man. All right, well, German kind of just died on us. When I started streaming was here, this candle. Literally, after this candle had closed, this is when I think I started the stream. And this is what it gave us. All right. Well, I'm gonna scoot. I'm gonna have to get some lunch in. Make some lunch for the missus before she gets hangry at me. So appreciate you guys for the time here. Sad we didn't get a trade, but I think that the idea stays the same. I'm gonna shift my focus now to gold for New York session. I'll keep an eye on German 40. Looks like pound US. Oh, come on. Come on. So Emma still hasn't taken the trade. She's been teased now. I think we're looking good though. I think it's going to take a trade. Little concerned about the news, getting that's going to be here. So I kind of wanted it to be in and then secured before the news, but I'll see if it gets maybe another unless it triggers probably in the next, in this 30-minute candle. If it doesn't trigger, then I'm going to turn her off. And I'll shift my focus to manual trading gold. That's a nice little push, little 40 pip push. Anyway, I'm going to leave it there. So thanks everyone. Take care, trade safe. All right. I'm going to just put up on another little screen for the end. Coming in May for YouTube audience. So details in the website. But with that, I'll catch everyone later. So trade safe, guys. I'll see you soon. Bye bye.